Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 0.9%. There, on the S&P Nasdaq did the same. Semiconductor flat Dow 0.5. Russell 2000, transport, banks, energy, biotech, healthcare, utilities, retail, emerging market. All these guys are red today. Notably though, energy did get hit along the healthcare. Looks like home builders is the only sector with the green print today. Bitcoin down, gold, silver, miners are also down. Dollar flat, oil down, treasury bond up a little bit. VIX popped a little bit. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed yesterday. And looks like this is the first hour fluctuation. Talked about that short-term moving average. That's the only level the bulls had it going for them yesterday. As you can see here on the first hour, and the second hour, third hour, and the fourth hour, looks like bulls tried really hard to protect that level. But once that level was lost here, as you can see, and once that level was lost and all the stops were getting taken out, and we gotten below it and flushed down. Looks like all these short-term traders who got in this vicinity placed their stop just beneath it. And once we lost that level, looks like that long bearish candle, as you can see on that last hour, people are freaking out, exiting. All the stops are getting taken out. Definitely, you know, a lot of people are aware of this level as 384 or so. And we talked about the fact that if we lose 383, 384, bear is going to push it to 380, right? And so that 380 is the level. We got to that level. We actually got lower than that, but my midterm moving average was in that vicinity. And so you can see we did see that lower wick here. So at least bulls are trying a little bit towards the end of the day, at least to protect that level, because last time when we gotten below that level right here, when we did, as you can see, this was back in June 9th. And as you can see right here, we kind of float around for a week or so. And finally, when we did lose that short-term moving average right here, that's when all the stops were getting taken out. Similar to today's price action, as you can see, that Marubozu candle there, we didn't even see. I mean, like the bears didn't even acknowledge. Bulls weren't even able to do anything. Even with the midterm moving average in that vicinity, we closed the day very, very weak. And then we saw that big down gap, and then tankage continued. A little bit of different scenario today. Obviously, you know, we are seeing a little bit of dip buying activities on that last hour. So buyers, you know, they were able to protect the midterm. And at least for now, things can change going into tomorrow. At least for now, we are above 380. And this is an important level for the buyers to hold. This is the pivotal area, as you can see, all throughout July and late June. This is a level. And if the bears and the sellers want to see 370, obviously they must break below this level, because there's no other support until we get to probably about 373 and 370, right? This entire vicinity. So we got pretty much free fall. If we do see lower prices, bears are going after 370 and 370. So this is a level the buyers need to protect with everything they got, or buyers or the sellers are heading to about 373 and 370, because that's the next level of support. And there's another level, possible scenario of this level being a support here. Let me draw that a little better. I don't know, that's not here. I'm gonna use my drawing tool here. So that's also, you can see it's kind of like a triple support. That we can see that we have the horizontal pivot, right? Going all the way back, actually going all the way back to early June, right? Prior resistance, and then a congestion zone right here, resistance, support. We're back at it, right? We got the midterm. Remember, midterm did act as strong resistance in late June. and then a little bit of fluctuation right here in early July. We're back at that level, and potentially, the keyword, potentially a rising uptrend support. So that's 380. So if the bulls can able to hold this level and possibly get it back up and fill this down gap as quickly as possible. Remember I talked about that a couple days ago when this down gap was open. As long as this down gap opens, as long as a down gap remains open, things will be hectic. As you can see, things got a lot hectic here as soon as that down gap was opened up, and it never got filled. So now we're in this vicinity at 380. We got the midterm moving average, horizontal pivot, and rising uptrend support. We do have a triple support here. So I think the best bet for the bears is probably gapping it down so you don't even have to deal with the support. Should there be any kind of bounce from here? The problem right now is that buyers, they did lose the short term and the micro term and the down gap. So you can see there are a lot of resistances they need to go through before they can go up and fill that gap. So the roads for the buyers, even in the short term, the midterm, the short term, midterm seems to be starting to look more bearish. In the midterm, that midterm moving average is kind of, sideways. So it's a little bit more neutral ground as of today. So unless there's some sort of fast bullish move in this vicinity, things are looking much more hectic today than it was last week. Let's check out that oscillator. See if you can extract any more information. So the oscillator initially crossed up on the 3rd hour today when we did see that move right here on that, on that short-term moving average. Well, when we did see the downturn, that thing just got right back in. So you can see that as of today, this thing is not supporting the buyers. And it's interesting, you would think there would be more downturn. We're kind of in a neutral ground. I think the oscillator is kind of aware of this level. Again, the rising uptrend support, the horizontal pivot, and the midterm moving average. So I think the oscillator is kind of giving us a neutral ground, right? Because the oscillator is pretty much like sideways action right now. Because I think oscillator is kind of waiting how this market is going to play out, understanding that we do have a triple support in this vicinity. If we do see a strong bullish move going into tomorrow, that oscillator could perk up from here like this, and that's what bulls want to see. However, if we do see a continuation to the downside, this thing could come right back in to the downside. So this is the important level, right? Either we see this thing potentially getting up to about 386 if we do see a pop, 386, 385 or so, or bears are bringing it down to 370. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Good luck trading tomorrow.